Today I'm going to speak about the two hottest tech stock in the market today, Fastly and CrowdStrike. These two amazing companies has just been hitting all-time high every other day, every other week. How high could they go? Are they in a bubble? Are they a buy? When should you buy? These are the questions I'll be answering in this video today, and I hope that helps you in your journey, make your decision, and also your research way forward. So stick with me on this video. See you soon. CrowdStrike, Fastly. Honestly, what do they do? What do they actually do? I can't even pronounce them properly. CrowdStrike. Sounds like a video game, or it sounds like a defense company. Yes, it's a cloud computing, cybersecurity company, and that's how I can put it really quickly. It's different to those old style companies like Sysantec or Avast, all those antivirus where they protect at the base of your computer or what you own. But CrowdStrikes are implemented for corporate customers on the cloud platform to deter against intrusion, deter against risk of loss of identity. So CrowdStrikes has got customers ranging from Uber, Lyft, and the Pokemon company, Virgin. And then on the other side, Fastly. Fastly is responsible for CDN, Content Delivery Network.
Fastly gives you full visibility and programmatic control of your services. You can set up new services in minutes, change or roll back configurations yourself in seconds, and access logs and analytics in real time. With our full-featured API, you can fully automate your CDN for the first time.
For the last 4 years, the last 3 years, the internet's improved so much. Regardless of where you go, you get your content, your Facebook, your YouTube, your videos, your favorite shopping online company giving you great internet efficiency that you forget that, you know, it's based on their CDN. Yes, your 4G, 3G network might have an effect, but it's really your content delivery. So that's what Fastly is about in a nutshell. For me, this two company is a company to own. It's the new next generation stock to own. I've spoken about this. I've called them out on the 15 favorite next generation company on this video up here. And today I'm going to share the details on the fundamentals and also the technical analysis to see are they a buy, and to explain to you what are the risks involved in buying this new tech companies at this very young prime age. Click on the link in the description to get WEBULL account for 2 free stocks up to $1,400. Get another friend to join, you give you 2 more stocks for free. So as you can see on the CrowdStrike, ever since the dip in March due to coronavirus and the lockdown, they've been on an extraordinary bullish run. Bullish run. If you look at the Q1, Q2 for CrowdStrike, they've just been beating their EPS. They've just been a flying home run across the park for them. And for the next quarter, they are telling folks that they're going to be hitting just below 0.01 for the EPS. And then after that, they'll just be soaring. They'll be starting to make money in the next quarter. A large amount of clients coming in. The earnings are just growing and growing. So this is a genuine growth company. If you use the rule of 40, the textbook rule of 40 meaning, your growth revenue plus your profit margin should be greater or equal than 40. That's the rule of 40. So for CrowdStrike, they are the growth of more than 100%. For the last few quarters, they've just been growing 80, 90, 100%. So 100% minus the negative profit margin of 23%. They're making loss, by the way, 20% average. They're still way below 40. They're about 60. So great growth company. But CrowdStrikes, you need to know that their clients are the end clients, are corporate customers. Corporate customers who are venturing into the cloud system. They have, they have to invest a bit more money to understand. There you go, CrowdStrikes then for you. So the market value at £21 billion just now. I think £21 billion is a forecast of the company in the next 2 years at least, if they keep their growth continuation every time on a 60-70% growth. So you buy in for the future value. If you buy in at 85 CrowdStrike, that's 2 years. CrowdStrike in 2022. If you buy in CrowdStrike at 100, that's you about 2.5-3 years. That's CrowdStrike going at this stable earnings, stable growth earnings above 60%. Ding, 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 ding. That's what CrowdStrike is. Remember, that's what you're paying the value for. That's the reason why they went IPO, to get this money to fund and grow. This is the reason why they want to grow. And you can see the total revenue. I'm not lying to you. At 2018, they're making $100 million. And then for the next year, they've beaten by 150% on $250 million. And then they beat it again to $480 million forecast for this year, 2020. So the growth, it looks good. Their money is being utilized. The IPO money is being utilized for their growth. It's growing really, really positive. It doesn't really matter with this lockdown economy, but perhaps this is a real reason for us to shine a torchlight on them by showing great growth. What is the ceiling for CrowdStrike? We don't know. People could sell off and take a profit, but then people would hold long term because a genuine growth company with a good future forecast. Unless something really, really bad happens in one quarter, you will expect a huge dip. So for me, if they do dip from this top, they should dip to the likes of the region of 80, 75. That's where the value you see for that's the share value. In the next 2 years, if they do dip, and then it gives time for them to recuperate, to regrow. And the P ratio, forward PE for 2020 is 515, yeah, plus 515. That's pretty high. But what I see in the likes of CrowdStrike and Fastly is, they look like Amazon, they look like Netflix when they were back in 2007, 2008. That's how these companies look like, and they are replicating exactly the trends that's showing. Of a young Amazon, of a young Facebook, of a young Netflix. That's why people are getting excited about investing.
If you live in the UK and looking for a UK stocks and shares ISA broker, please do check out Hargreaves Lansdown. It is what I use, and I recommend it to you and your family. I use it for my wife, my kids, and everyone building our wealth portfolio. And it's amazing, high security, very intuitive, and very great knowledge learning platform. Click on the link below to sign up today, free of charge, and build your journey today.
Okay, next follow on to Fastly. I already explained what Fastly is about, but if you look at Fastly, all-time high. Fastly is sitting about $86, all-time high again. My phone keeps telling me it's hitting all-time $86. Forward P ratio of minus 1,441. Negative, by the way. That means this year they're not going to be making money, but they're on a forward P of over 1,000. That means you're paying over 10 times the value. Is this even 2 years, 3 years? Is this even 5 years? But what they reckon, what people like about them is the earnings EPS which came out for the next quarter. They reckon it's going to jump from the previous of minus 1.2 all the way to minus 1. It's about a 12 times jump. They're so confident that all the clients are grabbing, all the customer base. The business is growing to a rate they can cope and they can deliver in the next quarter. Therefore, it's getting folks excited. It's growing 4 times from what it was all-time when it was low back in March. So people get excited. They are telling people they can achieve the target, and let's see what happens. And yeah, so Fastly is just rallying behind media consumption. They think that corporate companies need Fastly as a redundant second cloud service CDN delivery network. If I was a big company, if I was a multi-billion company, I use Azure, and I would also use Fastly as a secondary backup if Azure fails. So that's where Fastly comes in, and it complements the other bigger cloud players. That's how Fastly is just bringing up to the table here. So, but there's a bit more risk on Fastly of the overvaluation. They're more into a bubble compared to CrowdStrike. They are still growing. There are still places, the architecture they have to improve, the team they have to grow, there are loads of avenue they have to grow. If you look at the technical analysis here, they're way overbought at the RSI, and every time they buy, they'll dip. So if Fastly do fall due to some security issues, to some scandal issues, to any minor things that appear on the headline, they will fall hard at where you stand at 86. But at the same time, they are just going really, really quick. So for momentum investor, momentum trader, love Fastly. But if it does fall, it falls at the same time at a fast rate as well. Overall, great company, but beware when you're investing on high momentum company like Fastly. It's one to own for the future. Great product delivery service. And again, for corporate companies. But then again, be aware the faster they go up, it's the faster they come down as well. So I would like you to be aware of that. And the future value of this, reading the forecast, it looks like you're paying, going up at 80 to over $100, 80 to $100. You're really paying for Fastly's future in the next 5 years. Would you pay that? Would you invest in Fastly paying 5 years? It's completely up to you. Remember, if you were like me, if you're investing for 2030, fine, fair enough. But all I can say is if you do see a big dip with Fastly that doesn't impact financial, it'll be a great way to buy. So it's up to you if you want to buy in momentum, but make sure you take profits when it's going really high, when you've made it. But if it falls, please remember to buy Fastly as well, because again, it's a great company. It complements other bigger cloud service provider. It's there to complement everybody else's business. So this is me on Fastly. I've spoken about CrowdStrike. I hope you like, and maybe hopefully this video will help you in your research and journey. I will buy and own these 2 stocks. More likely CrowdStrike to buy more and more. Fastly a bit more cautious, to be a bit trading, take off some profit, waited dip, buy more. That is me, simple as that. And so do follow me on Facebook, like and subscribe to this YouTube channel. And if you're a super fan, follow me on Patreon where I share information in advance. Okay, so see you soon and hopefully see you in the next video. Bye.